Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss the Nasdaq Lux Health Tech Index. We'll take a look at its methodology as well as its performance. Mark, it's great to see you. Welcome back to Trade Talks.
Thanks, Jill. Great to be back.
All right, and let's take a look at your first slide here with an overview of what this particular index is about.
Yeah, sure. So a bit of a context here. Launched this index back in July of last year. Really worked pretty closely with Lux Capital, which is a VC firm that's been around for a little over 20 years, multi-billion-dollar firm that has a history and reputation of successfully investing in disruptive technology, and especially looking at technology companies that are kind of bridging the gap between technology and some other sectors. So in particular, they were interested in developing this index with us that looks at healthcare and how healthcare is being disruptive from a technology perspective, whether it's within kind of the medical devices space, diagnostics, things like digital health as well. And so what we have here is a pretty unique index. It's geared towards being, towards remaining a high growth index with some of the revenue growth conditions that have been thrown in here. Although we do allow some of the larger firms that have kind of become dominant market players to kind of relax that ongoing growth criteria. And then, as you can see, on the right-hand side here, in terms of looking at the size of the companies that are in here, as of the most recent recon, we had 59 constituents. 83% of the index weight came from that sub $50 billion market cap contingent, which is the portion of the index that we're still enforcing that revenue growth condition, where we're still growing at least 10% in each of the last 2 years for new index additions, 7% growth in at least one of the last 2 years to remain. So pretty high growth index. You got some of the larger cap healthcare names in here as well. But very nice kind of representation from the lower end of large cap and even some mid caps too.
Tell us about the composition. What kinds of companies are in it?
Yeah, so you look at the concentration of the index, it's pretty top heavy. About 61% comes from the top 10 names. On the right there, you can see those top 10 names going down from largest to smallest: Dexcom, Illumina. Very, very well-known kind of medical devices, biotech name, Intuitive Surgical, names like Align Technology in the dental space, Insulet, Viva Systems. These are all names that are capped in some way. We've got modified market cap weighting on this index. The top 5 are capped at 8% each, and then the rest are capped at 4% each to prevent too much concentration at the top. But still, you're generally going to see more or less around 60% of the index weight come from those top 10 positions because of those caps for the top 5 of the next 5.
Now, how about the index's performance relative to other benchmarks? And we can also see some of the returns with a number of these names were pretty impressive over the past couple of years.
Yeah, so let's start with that. Actually, on the right-hand side, those same top 10 names were showing 2020 and 2021 returns. Only one name here, the last one at the end, Viva, was negative in 2021. All the rest were positive, although not nearly as good of a year for healthcare as 2020 was. You can see on the left here with the comparison to some of the market benchmarks, we've got NDX there as a relative outperformer year to date, even though it's down over 10%. Going down the line, you have Solidoc, which is a kind of telehealth, digital health only index, doing a little bit worse than Nasdaq 100. Then you've got NBIJR below that. That's the junior portion of the Nasdaq Biotech Index, so sub 5 billion companies only. That one's down a little over 20% year to date. And then you've got NQH Tech, also down a little over 20% year to date. And then ARC-G, which is the genomics ETF from ARC. That one's the worst performer, down over 25% year to date. Just gives you a sense of, there's quite a bit of weakness, not just within the kind of biotech and more innovative sections of healthcare, but with high growth in general, right? We've seen that same type of weakness in many areas of traditional tech, things like software and internet. As rates have gone up, as there's been more pressure on some of these firms that have a lot of earnings and growth potential far out into the future, the market's been essentially applying what I've creatively heard called as an Excel model re-rating, an Excel model bear market where, you know, analysts are plugging in higher interest rates and taking down valuations that are, you know, largely driven by earnings potential far out into the future. So you can see, though, with the shape of this returns graph, we have seen a nice bounce in the last couple of weeks. Maybe that is the beginning of a bottoming that is happening in a lot of these areas that have been really pressured recently. You know, in terms of valuations, a lot of these companies are much more compelling from a valuation perspective than they were a year ago, when a lot of these parts of the market peaked.
And finally, Mark, let's take a look at the subsectors. And I always find it interesting to see the geographies and where these companies are largely domiciled.
Yeah, so subsector, you can see here, medical equipment is by far the largest at almost 50% of the index weight. Biotech and healthcare services are kind of the next two big segments. You've got some medical supplies, medical services, even a little bit of software and pharma in there. But by and large, this is a really kind of unique blend of biotech, which has obviously its own benchmarks from Nasdaq and others, plus some of those medical equipment, medical supplies and services companies that you would find in a broader, more diversified healthcare index. On the right-hand side, index weight by country. This is technically a global index at this point. We do expect over time, especially as these segments of healthcare develop more beyond the US. The US is by and large the leader in things like biotech still versus the rest of the globe, but we are permitting non-US companies to get in here. You see a few of them from the likes of the Netherlands, Sweden, China. We do expect more and more of these to be added as this index continues to grow, as we see some of these trends get globalized and exported from the US out to the rest of the world.
And Mark, is there any way that investors can get exposure to this index?
Absolutely. So actually tomorrow we have the first tracking product launching from the likes of First Trust. The ETF ticker will be EKG. Pretty nice ticker symbol that they got for themselves there. And yeah, we'll be very closely monitoring to see the flows and the interest on this product. Should be a very interesting launch to track going forward.
All right, Mark, and if you're catching us on the replay by tomorrow, we mean March 23rd, so it might already be out there by the time you are watching this. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.